Bruce Campbell joins me now from StoneCastle Investment Management for the StoneCastle Investment Management Cannabis Week and Corona Week update. Speaking of Corona, Canadian beer sales down 3% in 2019 being blamed on cannabis. What's the story there?
Well, I guess this is the largest drop in 7 years for beer sales, down, and it's being blamed on cannabis. And the interesting thing is that we don't really have cannabis beverages out yet, so they're just saying that people have consumed less beer because they're using cannabis in different forms. Everyone still continues to think that beverages are going to be this huge segment. I don't necessarily know if they will right off the bat. I mean, you basically look at the data in the U.S. and there's still a pretty small little fraction of what's going on. But it'll be interesting to see when they actually do roll out the beverages if it has another impact. If 2020 sales are down again, then I guess you can see why some of the beverage companies have got into the cannabis space. Obviously with Constellation, right?
Sure. You mentioned that Canadian sales data from December was showing 8% month-over-month growth and 146 million annualized at 1.8 billion. That's not a bad number. That's almost as much as the state of Colorado.
Yeah, I mean, what we're seeing is a continual ramp up. So if you look at that 146 million and annualize it, it's a 50% growth rate over the previous 12-month period. So we're approaching that, kind of $2 billion sales mark. If you look at Colorado, they have about 6 million people, give or take, there, and their sales are about the same as our monthly, they're about the same as our monthly annualized number. Right. And so if you take a look at that and sort of extrapolate out, that makes the Canadian market sort of in that 10 to $11 billion range, which is what originally everyone said it would be. Obviously, we need to grow into that, right? Where we need to get the stores, the locations, and get people who are in the black market coming over, and obviously having new people who have never experienced cannabis or who haven't experienced it for a while, get those crossed over as well. There's 750 retail locations right now. And when you think about that again, if you just look at Ontario, there's over 2,000 locations to buy beer and wine and alcohol, compared to 750 locations across the entire country. So you can see where that retail has to really expand before we can see probably a pickup in sales.
Sure. And is there any reason to be optimistic about the increase in retail distribution points in Ontario, for example?
Well, they continue to say that they're going to roll it out, and I think they were talking about 20 per month is what they wanted. I just recently was talking to a retailer this week, and they said that there was a sort of last minute change that they had their own theories on why this might have happened. But I guess the latest was that it wasn't going to just be a straight lottery, like as far as like who got in first would get access to these licenses, but they were actually going to look at who was prepared and who was ready. So it kind of takes away anyone who doesn't have capital and hasn't built a freestanding location out of the competition to start these new locations. But that being said, there are lots of sort of well-capitalized groups between the LPs and some of the public companies that are on the retail side. So I don't think there's going to be a problem. It's just going to be a function of like whether or not they can get them ramped up in that time frame, that 20 per month. But certainly that would help if we saw that through kind of the rest of 2020 and then into 2021. Mm-hmm.
Okay. Another news item that caught my interest this week that I'm sure you'll have some comment on was the merger of the HMMJ and the HMUS ETFs merging into the US ETF. Does that sort of give us a indication that that's where the money is? Is it going into the US more so than Canada?
Yeah, I mean, I guess it depends on how you look at it. I looked at it a little differently. We saw the Evolve ETFs announced that they were shutting down, and then I think this is kind of the next evolution in that. And what it really is showing me is that money flow from kind of the retail investor has really disappeared out of the market, and we can tell that by the stock prices that these things just continue to drip down and go lower. They're not maybe they've bottomed out here, but they're not certainly having any big moves upwards. And I think that's just a function of lack of of investor interest. If you look at those two ETFs that they're emerging, I think one has around 3 million in assets and the other has just a little bit less than 20. So, from Horizon's perspective, they're trying to make it efficient and obviously take advantage of the economies of scale by putting them together to reduce some of their costs and still manage the same assets, and then hopefully grow it down the road. Obviously, the U.S. is where the opportunity is. So what they said is we're going to get rid of the junior LPs and just have the U.S. LPs or the MSOs, and that would be the product that they run going forward. And these will, ebb and flow obviously with dollar amounts. It's probably not unlike what you would have saw if you had there wasn't a lot, but if you had a technology ETF back in sort of the 1999, 2000, 2001 era.
Right. Bruce, the BC Budtenders gave notice that they want to unionize. That was an interesting headline.
Yeah, I'm a little surprised that it's happened this quickly. You in an industry that's not really that old. It's surprising to see that they're already looking for the benefits of being in a union. If you look at other industries, something as an example like WestJet, it took them probably close to 15 years before they actually got unionized, and now in an industry that's a couple of years old, the Budtenders are already in the process of unionizing. But I guess that probably also has a large part to do with the fact that it's in BC. You didn't see the Ontario Budtenders announcing that. I mean, maybe it grows to there or moves to there, but it's kind of more along the lines of sort of the socialist feel that we have out here in BC.
Yeah, right. Interesting. So do you think that the unionization movement will spread to other sectors of the marijuana sector?
Certainly it's potential, right? I mean, once they get their foot in the door, that's what the unions always will push for, right? At this point in time, I think the wages have been probably pretty good in the sector. That being said, we've seen a number of layoffs in the last probably 60 days here. So, I think there'll probably be a bit of a tightening in the amount of compensation that's handed out. And so that would certainly be a ripe time for unions to move ahead with their unionization.
It strikes me as a little bit disingenuous to try to organize a union at a time when the entire industry is suffering financially. I mean, there's just no way that unionizing does not add a huge cost to the labor bill of these companies, and it might actually only serve to accelerate the demise of a lot of these companies. Don't you think?
It certainly could, yeah, for sure. I mean, that's as you say, the expenses are going to rise if they're successful in unionizing. But I suspect that the people who are sitting in that position where they want to unionize haven't really given that thought that, hey, maybe we should be happy that we're in this growing industry and we should let it breathe before we try to stomp on it.
Yeah, right. So do you think that would, and then my point being that on the other hand, if they accelerate the demise of the weaker LPs out there, they're going to accelerate the profitability of the larger LPs who survive, arguably.
Yeah, probably what it does is, if you look at it from a retailer perspective, which is where the Budtenders are, it's going to put pressure on anyone who's a smaller operator who's trying to manage, maybe just one or two stores. So you could see an acceleration in sort of the bigger conglomerates where they have, 30 or 35 stores now that, they probably can pick off, smaller stores that aren't as profitable because of a unionization and, bring those in, obviously economies of scale and synergies and make that actual profitable for them to operate versus, the guy who's just got one or two locations.
Right. So then going back to Colorado here relative to Canada for a moment, I didn't notice that was a topic later on in this conversation, but you extrapolate, so Colorado sales at 1.7 billion. If you extrapolate that to Canada, you come up with the figure 11 billion. Is that based on a per capita usage?
Yeah, that's correct. That's just taking the population and extrapolating it out and that's, if you go back to when Canada was first legalizing and, all of the analysts were trying to figure out what's the size of the market and what should we put as a multiple on this market. A lot of people use that where basically Canada's, 6.5, 7 times bigger than Colorado. That was one, and so they took the, extrapolated out the sales per capita there to what the sales per capita would be in Canada. And so, most of the research reports that came out initially on the size of the Canadian market put it somewhere in that sort of 9 to 10 billion, sort of 8 to 10 billion dollar mark, based on how much rec and medical you put into those formulas, is what they felt was going to be at full maturity. And if you look at Colorado, it's obviously been through all the growing pains that Canada's dealing with now. They have a full retail distribution network. They've got supply that's been oversupplied and now has come back in line. And that sort of shows you that based on that population number, we should be somewhere in that kind of 10 to 11 billion dollar range is what I'm saying.
Bruce, well, that's a great update for the week, and I thank you for your participation. We'll come back to you next week.
Yeah, thanks a lot. Have a good weekend.
You too.